Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com. It's Wednesday, February 12th. I want to look at LinkedIn. Now, I'm not sure that I've done any free chart videos on LinkedIn. I kind of don't think so. But here's what I've been looking for on the premium content side. Okay, this has been doing, what I would call, I call this like a touch and go, where use the 200-day moving average as like the reference for the runway. So the stock's moving up, and then it just kind of starts. It's not in a big downdraft like that. It just kind of starts drifting downward like a plane coming in for a landing. There's the runway. And what we're looking for, we're not predicting, we are looking for it, is a bounce off of the 200-day moving average where the stock then trends higher. And if the stock does that, then our interpretation is that this entire move here has been really, really healthy consolidation. We like to see this healthy consolidation here because then that frees the stock to move higher. Okay, well, guess what? We haven't seen that. So this is not a touch and go. This is like, mayday, mayday. Let's close runway 12 because we just got an aircraft that crashed here. This stock is now broken support. The way it's going now, and the stock has been in a fairly tight trading range, not really technically a squeeze, but you can see it has been fairly, I was going to say like unvolatile. Would it be ill volatile? Would it be volatility less? Stock's been trading without much volatility. How's that? The trading ranges have been pretty narrow. So with this support here, broken. Okay, like this would be the support right here. With this support broken, man, this is a move, and it's a move on high volume. This is a move that could go a while. So I would not be buying this stock, even if the stock rallied back above 200. What's happening then? Stock's just coming right back up into resistance. Okay, that's not going to work for you. So I would just stay away from LinkedIn. And frankly, for a nimble trader, I would short this puppy right now. If you're not so nimble, then you kind of want to wait for a little rally here first, and then if it rolls over, then you start shorting it. But the way this thing traded, unless there's something weird that happens overnight, I can see more selling. I can see more selling at the open. I mean, this just looks like it has a lot of downside momentum. Now, I'll take the other side of that argument, though. You have to be careful about a stock that is so obviously breaking support. It's like everybody and his brother, as long as his brother trades, would be looking at this and saying, I want to short LinkedIn. I want to sell LinkedIn. Now, if that happens, like if it were to happen, at the open or something, you could get a gap down and then the stock start to move higher again. But you have to watch for these obvious trades, because if this stock does not continue to sell, what is that telling you? That's telling you that the selling here is pretty much over, and it's not to say that you should buy the stock and expect new highs, but you can at least take the stock for a ride to the upside into this resistance level, maybe $10 or so, 5%, and then look for it to roll over. But the bottom line is right now, from what I see on this, if you want a, quote, strategy session on LinkedIn, I would say you just want to stay away. If you have to make a trade, I would sell it. So anyway, and by the way, always use a stop on things like this. Don't just sit there, particularly because I get emails every once in a while after something that I was wrong on, and I talk about so many stocks. If I was right on every single one, you wouldn't know who I was because I would just be trading. But anyway, every once in a while I'll get an email from somebody who they had no stop. They bought a huge slug of something that I said I'm bullish on. I was wrong. They don't sell. And then like 60 points later, when the stock has declined, they email me saying, when is such and such a stock going to go up? I thought you liked it. Or do you still like it? And I'll go like, I don't even remember talking about that stock. So the point is, use a position management tool, either position size or a stop loss. Don't just sit there and expect this thing to do what you want it to do. Okay, that's it for this evening. Members, get over to the strategy session. I'm catching up on all your requests.